We all dream of becoming a millionaire, to be worth $1 million. It's something that many of us can't even comprehend. Well, what about investing $1 million? What if you had $1 million in the bank and you had to invest it, or you could invest it? What would you do with that money? Recently, I was contacted by a subscriber, and this subscriber wanted to know how to invest $1 million. Well, there was one little small twist to that, and we're gonna find out what that twist is right now. What's going on, y'all? Welcome to Wealth Hacker Labs. This is the channel dedicated to teaching you new ways to grow wealth that is not taught to you in schools or by your parents. I am your host, Jeff Rose, and today we're talking about investing $1 million. Now, for many of you, investing $1 million isn't on your radar yet. It might seem like you'll never get there, but if you're watching this channel and you subscribe, guess what? Eventually you will become a millionaire. You just gotta practice the wealth hacker principles, because that's what this channel is all about. But in this case, this subscriber didn't want to just invest $1 million. They gave me a bit of a curveball. For whatever reason, this person wanted to invest $1 million, but they didn't want to involve the stock market. Now, I'm not really sure why this person wanted to avoid the stock market with their $1 million they wanted to invest, but I really like that question, especially for this channel, because that is what wealth hacking is all about. Yes, you can make a solid return investing in the stock market, but it's not the only way to build your wealth or hack your wealth. In fact, many of the successful entrepreneurs and business owners that you look up to, that you admire, they have achieved their wealth status by not just investing in the stock market. So you think of like the Warren Buffetts and the Gary Vaynerchuks and the Tony Robbins and the Bill Gates and the Jeff Bezos. All of these types became successful and wealthy not just from stocks. In fact, many of them built their wealth from the 7 different ways that I'm going to share with you today that you can invest that does not involve the stock market. So let's go ahead and break down what those 7 different ways are right now. The first way that you can invest your money that does not involve the stock market is by far the most boring one, but it is in a way that you can invest and make a little bit of money, and that is investing your money into an online bank. Now, with online banks, that means you could do a savings account, you could do a money market account, you could do a CD, a certificate of deposit. With online banks, traditionally, you're going to make more money than you would get with a brick and mortar bank. Mostly because they don't have all their different branches, all their different locations, all that overhead that goes along with running that bank. Yes, they have their headquarters. Yes, they have their corporate offices. So there are expenses with an online bank, but still you can make more than what you can get typically with a brick and mortar bank. For example, you can open an account with Capital One 360 and they're going to pay you 2% on your money. Now, I know 2% is not going to make you wealthy, but if you look at the bank wherever you have your money right now, chances are you're probably not even making 0.25%. So if you're making 2%, we're talking 8 times as much as what you're getting from your current bank. Another example is Marcus by Goldman Sachs. You can take out a 12-month CD that's going to pay you 2.75% on your money. With other banks, you'll be lucky to get 2%, especially for that short term of a CD. Now, just do your research, make sure that you understand, you know everything about that bank, make sure they're FDIC insured and all that good stuff. If you want to check out another video where I talk about 7 different ways that you can avoid a bank and still make money with your cash, be sure to check out that video too. Option number 2 that allows you to invest your money while avoiding the stock market is investing into TIPS or short-term bond, especially bond ETFs. So TIPS are Treasury Inflated Protected Securities, just another way of saying short-term bonds. Now you can go out and buy ETFs. You can buy the TIPS ETF, or you can buy a Vanguard ETF on the short-term bonds. Now, the cool thing is that a lot of robo-advisors are coming out what they're calling their Smart Saver accounts. That's what Betterment calls theirs. So you can open up a Smart Saver account, which basically is a blended portfolio of TIPS and short-term bond ETFs. Now, with these, you're going to make more money than you would in your standard savings account that your online bank offers, but there is going to be some fluctuation. Like, this is not a FDIC insured investment, so don't think that you're putting your money in and your principal is guaranteed. You can see some fluctuation, but the way they're trying to manage these is to give you more return than you're going to get in your checking or your savings, get you a little bit more return, a little bit more risk, but if you're okay with that, then it might be worth looking at. Betterment has an option. Wealthfront recently launched an option. A lot of these robo-advisors are offering these smart saver type of accounts. Once again, make sure that you read the fine print, understand what you're getting yourself into, but it is another way to invest outside the stock market and with little risk. The third option that you can invest without the stock market is buying an annuity. Now, if you're watching this and you are in your 20s, 30s, and even your early 40s, chances are an annuity makes absolutely no sense for you. I see a lot of advisors that want to sell you an annuity, and they'll make you think that this is a great investment even if you're only 25 years old. But many of these products either have surrender charges, long contract periods, or hidden expenses that they're just not as good as they are made out to be. That being said though, if you're trying to invest your money and avoid the stock market, then an annuity could make sense. Now there are many different types of annuities. You could do a fixed annuity. Now with a fixed annuity, it's very similar to a CD in the sense that you're getting a fixed interest rate. But it's different, very, very different than a CD in that if you want to cancel your CD or if you want to get your money back, the only thing that you lose is your interest. You don't lose your principal, you just lose the interest that you would have earned. With an annuity, you don't lose your interest. Well, you do lose your interest, but you also could potentially lose your principal because they have a surrender charge. So you might have to pay a 5%, a 6%, a 7% surrender charge just to get your money back. Now, don't buy an annuity if you don't think you want this for the long term. Make sure, once again, you understand what you're getting yourself into. With an annuity, you're gonna have to sign all this paperwork, all this documentation, and it's going to be paperwork overload. So once again, make sure that you know what you're getting yourself into before you sign the dotted line. Other types of annuities that will probably be pitched to you are variable annuities, which are absolutely horrid. Avoid variable annuities. They are like the life sucker of hidden expenses. If you don't believe me, watch another video where I talk about variable annuities and why I hate them so much. Another annuity that you'll be pitched is a fixed index annuity. These are a little bit better, but once again, you're being locked in for a very long contract period. And if you don't need guaranteed income, which if you're watching this channel, chances are you're younger, so retirement and fixed income retirement is nothing that you care about. So these are types of annuities for you just want to avoid. But once again, this person is asking me how to invest while avoiding the stock market. So just because of that, that's why I have to talk about annuities. So you get where I'm coming from. All right, the next option, investing outside the stock market, is life insurance. Whew, I know. Investing, life insurance, like, does that even make sense? That just seems like an oxymoron, right? So yes, life insurance could be an investment. You know, if you've talked to an insurance agent, chances are they try to pitch you whole life insurance. Maybe they try to pitch you index universal life insurance. If you want to invest your money, invest with quotations and put it into something that's safe. Just remember that the first several years of owning this product, all your money that you're putting in is going towards the cost of insurance. By the time you actually make any return, we're talking several years down the road, could be 5 years, could be 10 years, before you're actually making any money on the money that you put in on your principal. Also, you have the cost of insurance. So the cost of insurance is going to eat away at any potential return. Also, be careful how the insurance product is being pitched to you, because I've heard several cases where they'll come to you and say, hey, we've got this insurance product that's paying you a 6% dividend. Well, that sounds pretty good, doesn't it? But the one thing they failed to mention is that the 6% dividend is a gross return. You still have to pay for the insurance, so the cost of insurance. So that 6% gross might end up becoming like 2.42% net. That's a big difference, especially when you start running your calculations on compounding interest. You know, 6% versus 2.42, that's a big amount of money that you're giving up. So once again, know what you're getting yourself into. Now, I had a former client that was in a unique situation. They came across a large sum of money. We're talking 7 figures plus. And the way that they inherited this money, it was part of an estate sale, and they didn't know if they had to give some of the money back because of taxes. Now, because of that, they wanted to invest that money short term. They didn't want to pay any surrender charges on the principal, and they wanted to make more than what they could get at their local bank. So with that, we started looking at options, and with them, we discovered an index universal life policy that just fit their needs to a T. Now, the one thing you gotta know with index universal life policies and even whole life policies is that you can look at the same policy with two different agents and they may look like two totally different things. The reason behind that is because you can structure these policies so much different behind the scenes. You can add additional riders, you can take off riders, you can reduce your commissions. You can structure these depending on what the client is trying to accomplish and what their needs are. So in my client's case, they were looking for a safe place to park their money, that their principal was guaranteed, they didn't have to pay a surrender charge, they wanted to make more interest than what their local bank was paying. In this case, this policy, there was no surrender charge. They actually had the potential to make more with the market because we could tie it to an S&P index. The principal was protected. It had a dividend that was paying just under 3% gross on that dividend. Now, once again, that's gross, that's not net. Remember, we were talking about 6% gross versus 2.42% net. So in this case, a 3% dividend, I think the net was like 1.8, 1.9. Now this was a few years ago, so the fact that you can make almost 2% as opposed to like 0.05% that their bank was offering, it just made a lot of sense for their money. And in fact, the 3 years that they had it, they ended up averaging, I think it was anywhere between 5 to 6% because the market had done well. So that's just an example that yes, there are options that you can invest your money in life insurance. You have to know what you're getting yourself into. You got to make sure that you trust that agent, make sure that they've explained everything, that you understand it to a T. Now, the fifth option of investing your money outside the stock market is in investing into a private business. Now, let's just be straight up. This is a lot more risky than putting your money in an S&P 500 ETF. So if you're investing into a private business, I mean, yes, the returns could be phenomenal. You can also lose your shirt. You could lose every single penny that you put into it. But if you look at successful entrepreneurs, you look at Gary Vaynerchuk, for example, he's talked about all the tech companies that he's invested into as an angel investor and has made hundreds of thousands, if not millions of dollars by putting a small investment in. Now, you can become an angel investor, but you can also invest into smaller businesses. Let's say that you have a family member or a friend that's opening a retail business in your area. Well, you can invest money into their business, become a minority equity owner, and then take a percentage of the profit. So that's a way that you can invest. A friend of mine, straight out of college, he and his brother invested into franchises. The first franchise that they opened were Little Caesar restaurants. They opened up 5 or 6 Little Caesar locations. From there, they expanded to another franchise and started opening Sport Clips franchises all over the Midwest. And the last time I counted, they had like 25 to 30 different franchises, all these combined. I mean, they're doing very, very well. But that's just another example that you can invest your money not into the stock market, but into a private business. So there are tons of different options that you can invest into. Once again, you better know what you're getting yourself into, and you better not be putting all that $1 million into one business. I don't care how smart you are. Trust me on that one. Trust me. The sixth option that you can invest your money into outside the market is into real estate. Now, just like everything else we talked about, you better know what you're getting yourself into. Do you want to invest into wholesale properties? Do you want to try to flip properties? Maybe you want to become a landlord and do rental properties. There are tons of different options that you can do there. If you don't want to become a landlord, you can find somebody, a property manager, that will take care of those properties for you. A good friend of mine just bought his first rental property. He bought a condo through the help of a local real estate agent that just knows the area well. They looked at several properties before they finally found one that fit the price that they were looking for. So now they've got this rental property and they've hired a property manager that takes care of everything for them. So that takes care of finding the rentals, takes care of managing the property and hiring the cleaning services and everything that goes along with that. So the only thing he had to do was come up with the money to buy the property. So this is the first one, and he's going to add several to his portfolio. But once again, it's just another way that you can invest your money outside the market through real estate. Now, I've talked about Fundrise and a lot of these crowdfunding platforms. That's another option that you could consider if you want to invest into real estate without having to become a landlord. And plus, you don't have to leave your house. You can just open an account online, fund it, start investing through Fundrise. Now, another way that you can invest, but you got to know some real estate investors to do this, is that you can become a hard money lender. So basically what that means is that real estate investors, they're always looking out for good deals. If they don't have money in the bank, they'll have to go to the bank, apply for a loan, have some sort of line of credit. And sometimes that could take several days to get approved. So with a hard money lender, if you've got cash sitting on the sidelines and you want to make a good rate of return and you trust this person to find some good properties, they can come to you and say, hey, I've got this property, I need $100,000, I need $200,000, I'll pay you 7% interest for 24 months if you loan me the money so I can go buy that property. So it's a way to make good return on a short-term loan. And that's just one example that you can invest your money into real estate. And we're not even talking about buying properties, we're just loaning money to a real estate investor. The final option, option number 7, is investing into peer-to-peer lending. So yeah, you could loan your money to friends and family members. They could pay you an interest rate and you can make a little bit of money. But then you have that awkward situation where that family member hasn't paid you back and you see them at the birthday party and you just avoid them and you try to make small talk and you're fuming, you're boiling because you owe me that money, you better pay me back. Okay, so don't loan your money to family and friends, but you can loan them to different peers that you don't know, and you can give them micro loans, and that's exactly what peer-to-peer lending is all about. You can check out several of my other videos where I talk about Lending Club and the other peer-to-peer lending options. With peer-to-peer lending and Lending Club, you can expect to make anywhere from 3% return on up to 8%. Really depends on how aggressive you want to be and how much you want to manage the portfolio. For me, my accounts have averaged anywhere from 4% to I think high 6%. I got to double check my numbers on that one. But with me, like, I don't do anything. So I just open the account. I've got an automatic invest where, once again, call me the lazy investor, but it's just a way where I can make decent return without having to manage a portfolio, having to log in every single day and make trades. Once again, just another option that you can invest your money outside the stock market. At the end of the day, you have so many different options to invest your money, especially if you got $1 million. If you got $1 million to invest, I mean, there are more than the 7 options I've just outlined. But you've got options. The one thing you don't want to do is you don't want to get too greedy. Something sounds good, like, oh, you can make so much return that you can triple your money overnight. Like, it would be nice to take that 1 million to 3 million. But if that doesn't happen and your 1 million becomes 500,000, that's not going to be a good day. And that's when we talk about diversification. That's when we talk about knowing what you're getting yourself into. Make sure that you understand. If you just have this little bit of hesitation on this investment and if you should put your money into it, then go seek some help. Find a mentor, find a counselor, find somebody that's walked this path before you that can give you help before you put your money into something that you may end up regretting. Because I tell you what, buyer's remorse when it comes to investing is something you don't want to experience. It's not a good feeling, I promise you. All right, y'all, I hope you enjoyed this video. Until next time, this is Jeff Rose reminding you that it's your money, it's your life, and only you can make it awesome as long as you invest and you know what you're doing. Peace.